Welcome to the weekend edition of the Fear and Greed Business Headlines, the week that was, a wrap of the biggest stories over the past week. I'm Sean Aylmer. It was a huge week for the economy, Canberra, Washington, London, Beijing, Paris relations, commodity prices, and rich people. The curse of September hit financial markets. Over the past 35 years, September has been the worst performing month on the calendar, and this rang true over the past week. Equity markets have performed strongly for most of 2021 in the US, Europe and in Australia, but Wall Street has come off the boil. It's not falling, it's just sort of treading water. The S&P ASX 200 in Australia is off its highs, though for most of this week it traded in a really narrow range. Worrying equity traders are a few things. First is the spread of COVID and vaccination rates, of course. Second is fear that inflation in the global economy is structural, not transitory, as central banks keep telling us. We'll find out more about what the Fed thinks next week when it meets. And third is that global equity markets are trading at high valuations. They're expensive, at least on a historical perspective. But what's the option when interest rates are so low? Putting all this together, equity markets are just lacking a bit of direction. It's a bit the same for the Aussie dollar, which traded around 73 US cents all week. There's nothing wrong with that. Better to be at 73 than 78, at least from an Australian economy perspective, especially when we can't go overseas. And a steady currency makes planning easier for importers and exporters. Plenty of commodity prices have gotten a wriggle on in recent weeks. Prices for base metals like copper, aluminium, lead, tin, nickel and zinc. Now they're called base because they're not precious. Precious are things like diamonds and golds. Anyway, the base metal prices are all around record highs. Coal is fetching decade-long highs. Gas prices are high. Even uranium has made a comeback 10 years after the Fukushima nuclear disaster in Japan. But one commodity that's not so hot is iron ore. The price of a tonne of iron ore is now around 110 US dollars. That's about 120 US dollars a tonne less than May. It's good to see the soft commodities doing well. This week, the arduously titled Australian Bureau of Agricultural and Resource Economics and Sciences forecast a record $39.5 billion harvest, with grain, cotton and sugar growers to benefit most. The weather's been good and prices are high, with farmers having overcome mice plagues and labour shortages. In international news this week, the World Health Organization said COVID variants that can evade vaccines are likely to emerge in poorer parts of the world that are unvaccinated, and rich countries should hold back on booster doses until the poor countries catch up. Enabling poorer nations to catch up in the race to vaccinate will be one of the most critical issues in 2022. Meanwhile, China said it had fully vaccinated 1 billion people, while Pfizer said the effectiveness of its jab wanes after 6 to 8 months based on a study using US and Israeli data. A booster jab then restores the effectiveness of the inoculation. New Zealand's capital city, Auckland, extended its strict lockdown this week with the outbreak of the Delta COVID variant still in the community. Prime Minister Jacinda Ardern is following a zero-tolerance strategy. Good luck. There was plenty of economic data out from around the globe. The numbers out of China suggest the world's second largest economy slowed during August. Inflation in the United Kingdom rose more than expected. Europe seems to be picking up a bit of steam, and the news out of the US is, well, it's mixed. The United Nations Conference on Trade and Development said global growth this year is likely to hit 5.3%, the fastest pace in 50 years, before slowing to 3.6% next year. Apple's annual launch took place. There were 4 new iPhone 13 models, a new iPad mini, and a new Apple Watch. According to the big tech giant, they're bigger and better than ever. I'm not sure about that, Mr. Apple. And finally, I loved the story out of the United Arab Emirates this week. The Middle Eastern country is about to use German Shepherds, Labradors, Cocker Spaniels, and Border Collies to smell COVID-19 on travellers. Apparently, the canines can pick up the scent of the virus from sweat. Back home, all in all, the COVID news this week was encouraging. Vaccination rates are improving rapidly, with about 300,000 jabs being administered every day. The national one-jab rate is 70%, while 45% have been double-jabbed. The most affected state, New South Wales, is doing even better and looks like hitting a 70% vaccination rate by the middle of next month. That means an easing of restrictions. In New South Wales, the case numbers seem to have plateaued. Unfortunately, that's not the case in Victoria, although the actual numbers are about half those of New South Wales. It looks like the virus in the southern state is running about 2 or 3 weeks behind its northern neighbour, so hopefully Victoria will start to open up late next month. At least vaccine supply isn't a problem, with more than 1 million doses of the Moderna jab arriving this week. What really got me enthusiastic about all the COVID news this week was the federal government saying it will trial a vaccine passport, and then Qantas scheduling its first overseas flights to London, New York and Asia from December 18. And businesses will soon be able to offer jabs at work. Already law firms, airlines, caterers and manufacturers have instituted either no jab, no office or no jab, no work policies. Australian Bureau of Statistics figures this week show that residential property prices jumped 6.7% during the June quarter. Now, that was the strongest quarterly growth since the ABS began keeping records back in 2003. All the capital cities recorded rises, led by Canberra and Sydney. The total value of housing across the nation is now almost $9 trillion. That's 3 times the level of superannuation. The OECD, which is now headed by former Federal Finance Minister Matthias Cormann, recommended a review of the Reserve Bank of Australia this week, given it keeps missing its economic forecasts. It's not alone in that. Treasurer Josh Frydenberg wasn't against the idea. They did say he thought the central bank had done a good job. The corporate regulator charged former Vocus executive and current executive director of Unity Group, Vaughan Bowen, with insider trading over the sale of Vocus shares in 2019. The Australian Securities and Investments Commission alleges Mr. Bowen sold shares when he knew that a takeover bid for Vocus was about to be pulled, and the rest of the market was informed. He denies the charges. Insider trading carries a maximum of 15 years jail, though are notoriously difficult charges to prove. There was lots of interesting corporate news around. Let's start with executive pay. CEO pay jumped nearly 20% on ASX-listed companies last financial year on the back of record profits. The bosses of Gold Digger Newcrest Mining, Property Group Mirvac and Woolworths were among the biggest winners, according to a report in the Financial Review. But Macquarie Group's Shamara Wickramanayaka remains the highest paid, with reported pay of just under $16 million. One of the biggest deals in corporate history got a kick along this week. The board of Sydney Airport opened its books to a consortium of mostly superannuation funds led by IFM investors. The consortium's made an offer worth $32 billion, which includes taking on the airport's debt. If due diligence goes to plan, the board of Sydney Airport will recommend the offer. It aptly demonstrates the rise of massive super funds and their increasingly influential role in the Australian market. Wesfarmers' $764 million bid for Australian pharmaceutical industries got the green light from the board of the wholesale distributor and retailer of pharmaceutical products. It means Priceline Pharmacies and Clear Skincare will become the basis of Wesfarmers' push into healthcare. But private equity group EGT dropped its bid for financial software business Iris. Telstra boss Andy Penn said by 2025 the telco giant will strip out a further $500 million in costs, grow its Telstra Plus rewards program and expand investment in its 5G network so it covers 80% of mobile traffic. Bramble's share price tumbled after boss Graham Chipchase said he'd boost spending on digitising and modernising the pallets company, triggering a short-term hit to profits. Now, I thought about this story. Brambles has 12,000 staff and operates about 345 million pallets, crates and containers across 60 countries. But it isn't digital. And ANZ boss Shane Elliott said low interest rates, record house prices and flat wages growth were creating a social divide, making it very difficult for younger Australians to get into the mortgage market. I just hope that hasn't just occurred to him. Surely he's known that for a while. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest story of the week was the economy. Crazy jobs numbers, a very calm Reserve Bank, confident consumers and businesses, all amidst the worst pandemic in more than 100 years. When did Australia, as an economy, become so sensible? It started with the Reserve Bank Governor Philip Lowe warning that small and medium-sized businesses are facing extremely difficult conditions in lockdown states, and the longer they have to wait for economies to reopen, the greater the damage will be. Dr. Lowe made it clear that the central bank isn't going to use interest rates to pop the housing bubble, and he's worried about young Australians being hit hard by the pandemic. Now, Dr. Lowe grew up in Wagga Wagga in New South Wales, close to the Victoria border. He went to high school there. Country towns like Wagga are full of small businesses and young, often restless Australians. It seems he understands their plight, and it was good to hear his comments. The week then started to get a bit crazy, at least for members of the dismal science. Business sentiment and consumer confidence figures were released. Okay, people and companies aren't as confident as they were a few months back, but they're still pretty happy, and that's somewhat surprising given the lockdowns. Then the labour force statistics for August came out, and they were crazy. The data showed an unemployment rate of 4.5%, lower than July. That's just incorrect, given 146,000 people lost their jobs. The way the numbers are put together means they include people, about 300,000 last month, that are employed but working 0 hours. Also, plenty of people who were looking for work dropped out of the market in August. Taking all that into account, economists reckon the real rate of unemployment is at least 7%. As Mark Twain said, there are 3 kinds of lies, damned lies, and statistics. The sleeper story of the week came from buy now, pay later group Zipco. It's adding cryptocurrency trading functionality to its payment system, meaning merchants will be able to accept digital tokens such as Bitcoin for purchases. It's rolling it out in the US first. When digital currencies become easy to use, and that's what Zipco is doing, they're much more likely to be accepted by retailers, manufacturers, and consumers. I just think this story is a prelude to part of the future of payment systems. The most remarkable story of the week is how quickly Australia has delinked itself from much of Asia and well and truly jumped into bed with the US and UK. Okay, India and Japan are hanging around the boudoir as well, but the decision to dump the $90 billion submarine contract with France and instead buy 8 nuclear subs from our new best friends didn't impress Paris or Beijing. If nothing else, the timing of the announcement was provocative to China, our biggest trading partner. The current federal government has proven very internationalist in recent months, with trade, defence and strategic deals with the UK, USA, South Korea, Japan and India. Not something I expected Scotty from marketing to do. But as the miners came out and said this week, it doesn't help our relationship with China. And, like it or not, we are very reliant on China to buy and sell stuff. It's kind of like my relationship with my local IGA. I can walk there, and I used to buy from it. But then I got into a dispute over what I perceived as rudeness about proving I had used a QR code when I went in there one day. Now, I refuse to go there. The IGA loses out by not getting my money. But so do I, because now I have to drive to buy my milk. It's a bit like China and Australia. My favourite story of the week involved Canva, the visual communication platform. It hit a valuation of $55 billion. If it was listed on the ASX, it would be a top 10 company, bigger than Fortescue, Woolworths and Telstra. Canva was started by a couple who have since married. Their names are Melanie Perkins and Cliff Obrecht, and they own 30% of the business. That makes them worth about $16.5 billion together. Melanie and Cliff are in their mid-30s, young, rich, good-looking, and they seem like decent people as well. Just the sort of kids in the schoolyard I was always jealous of. And what to do with all that money? Well, Mr. Obrecht said they wanted to give it away and make the world a better place. Very noble, but I might suggest they scan the for sale pages and perhaps snap up James Packer's mega yacht that went on the market this week for a little over $200 million. And that's everything you need to know from the last week. I'm Sean Aylmer. I'll be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then.